Good morning, everyone. Welcome to our Wednesday morning trading room. Let's get the screen share going on. Okay, yesterday where the market did remain in a bit of a sideways fashion as we anticipated. But this morning, we've opened with a little bit of a gap. You can see prices letting off here at the close yesterday, somewhere around the 66.90 area, 66.85. But things quiet through the Asian session. But here, right in the middle of the European session, the NASDAQ taking a little bit of a dip. And after that, it fell flat as well. So we've got a little bit of a gap to the upside here this morning. We'll see whether or not they try to get into that. And so far, it does appear that way. A lot more volatility this morning as well. The hawk here with a very early first micro macro cross right on the open, and that looks like it had some decent follow through to it. Everything else kind of on hold at the moment. Phyllis asks, just curious, why are you using the NASDAQ? Great question, Phyllis. I like the NASDAQ for a couple of reasons. First off, it has a smaller tick value. It's only $5 a tick. So it's ideal for smaller accounts in that if you're trading a smaller account, it actually opens up the possibility to trading more than one contract. Not always, but sometimes you'll be able to trade multiple contracts. That, of course, gives you a lot more options than just trading a single contract. And the other reason is the volatility. The NASDAQ tends to be a pretty good mover most days. So, we want to be trading something that is moving. And we want to be trading something that's going to pay reasonably well. Now, a lot of people, when they're trading the stock indices, they're going to look at something like the Russell or the E-mini, because their logic is, well, the Russell is $10 a tick and the E-mini is $12.50 a tick. I'm going to be making more money trading the higher tick value. Right? Intuitively, that seems to make sense, but I'm just going to load an E-mini chart here and I'm going to show you something a little interesting. All right, so here now is the E-mini Raptor. And this, the NASDAQ. So let's take a look at, here, we'll take a look at this overnight move. The markets do tend to move together for the most part. All right, so let's take a look at this move right here, and let's say we took it from this swing high to this swing low. Let's see what that's worth. Oh, shoot, hold on. I need to reboot my trade manager. Okay, so from this swing high to this swing low is worth $550. Let's see what that same move is worth on the NASDAQ. I want to make sure I get the times right. So, the time right there, the first swing. Okay. So we're going to go from this swing high to this swing low. Ooh, look at that. It's worth $625. So what a lot of people don't realize is that even though the E-mini and the Russell and some of these other instruments have higher tick values, very often the NASDAQ will move an equivalent dollar amount. And as you can see, occasionally it will even move a little bit more. So why is that important? Okay, well, let's take a look at this scenario again, this time trying to control our risk a little bit better. Let's say we took this signal right here on the E-mini, and I'm going to, for argument's sake, I'm going to run a stop right here. So I'm going to take it right on the signal, and I'm going to take it on this swing point right here. In actual fact, if I were going to try to run this trade, I would probably try to run it above this stop, and the best stop placement is right above here. Let's see if I can run it to the crest in the whatchamacallit, the band. Sorry, had a seniors moment there for a second. All right, and we're going to be all in, all out on the trade as well. Okay. So I'm going to enter on the hash mark. Oh, let's just see if I can afford this. Oh, I can. Okay, so I could afford one contract entering on the signal. Oh, sorry. No, let's do this correctly. Okay, so for my account, I can afford two contracts, and that's going to yield $825. If I were trading the NASDAQ and I took that same setup, so I'm entering on the signal, and I'm risking it to here, and I'm taking profit down here. Come on. While you can see the risk amount is the same, I'm earning more. This isn't the best example. Very often what will happen, because of the $12.50 per tick on the E-mini, it will only allow me a single contract, which makes the example even more pronounced. But imagine for a moment here that I could only trade a single contract, and my earnings would be half, whereas my NASDAQ earnings would be much greater. So a lot of people shun the mini contracts, thinking, oh, well, mini NASDAQ, $5 a tick, why, I can't be bothered. And they do it to their own hurt. They don't realize that they can actually make more money trading a mini contract like the E-mini. Well, that's good. Phyllis says, I already learned a few things in the last few minutes. Well, that's good. That's what we're here for, to help you become a better trader. Yeah, a lot of people never do the research for themselves. They never take a moment and say, gee, maybe I should give these mini contracts a whirl. The other popular mini contract is the mini Dow, and the symbol for that is YM. But it is not quite as volatile as the NASDAQ. And that can be a good thing as well. The moves tend to be a little bit smoother. I think there's a couple of people in the room trading the mini Dow instead of the NASDAQ. And that's, that's certainly an option as well. Here, I'll bring up the mini Dow chart while we're waiting. All right, so here now the mini Dow. And you can see it's not really going anywhere. The NASDAQ isn't going. They're all producing the same signals. Here's that same signal that we were just looking at. So if we did it on the mini Dow, oops. The mini Dow would again yield at least as much as the E-mini S&P, and it's pretty much on par with the NASDAQ as well. Slightly, a few dollars less, about $50 less in the risk. And if we take a look at yesterday's session, it's going to look, you can pretty much lay this over top of the NASDAQ chart. It's going to look very similar. So some nice solid signals here. Again, a couple number 3 signals. Here's a number 2 signal, a counter trend. But don't forget, with the counter trend, our target, our initial target is the hard edge. So this one wasn't really worth taking. Came back with another hard edge bounce, and some very nice follow through from that. So the stock indices will move, as a rule, they tend to move together for the most part. They may drift occasionally. But if they are not in sync, they do tend to catch up to each other. All right, well, we've got ourselves a little bit of a mixed bag going on here this morning. It looks like the buyers early on tried to rally the market up. A couple of buy signals here. Here's something to watch for as well. When you're getting all these signals, that's very often an early clue that the market is lacking direction and it may kind of drift sideways. Choppiness. And as I mentioned yesterday, it is all right to wait. Sometimes being patient with the market is the most difficult part of trading. The eagle trying to get a little bit more bearish here now. We're working on a rule of three signal. It's a weak rule of three signal in that it's a counter trend signal, counter trend to the short side, which would actually put it in tune with the bigger trend. So on the one hand, yes, it's a counter trend signal, but on the other hand, it would be also a with trend signal. Okay, we're getting a first micro-macro cross signal now on the hawk. We have a rule of three signal here on the eagle, even though it's only signaled twice. We're getting a second push entry. The second push entry simply means I've allowed the signal to engage. I'm looking to see where the reaction is, and it makes sense that the reaction would be at this swing low. Here's that first micro-macro cross signal on the hawk now. That occurs when your micro line and macro lines cross. It's the first signal which is in sync, a very powerful signal as far as the hawk signals go. I'm not going to duplicate it here because it sounds like I just got filled here on the eagle. The falcon not producing a signal just yet, and the raptor also waiting. I suppose if you could have gotten this one here as a early number one, an early cloud crossover, but technically if we see a little bit of a pullback here and then the sellers come back with another sell signal, then that's going to be our number one signal, our cloud crossover signal. So we had a warning dot, but no signal. There it is. There's the cloud crossover. So the raptor now also looking for a short, and here too, because of the sideways nature of the market, it would be advisable to do a second push entry. And all that means is I allowed the signal to print. I allowed the bar to move against me a little bit. You could even use this bar and enter below there. So if you use this bar for your reactionary bar, you could enter below there now. Initial stops ideally above here. So regardless of how you planned your entry, you could be short. And there we go. Would have found our first profit objective on the Raptor. Hooray for us. Okay, our Eagle trade almost down here to the profit target. We did hit the break-even trigger. Come on, just give me a couple more ticks. There we go. So now we're back here to the overnight low. It looks like we're going to drift through that as well. That's okay. I'm all right with my profit. No point in being greedy. It's always nice when we get a little bit of follow through on some of those signals. Now, as is very often the case, once we've hit our high probability profit target, it's not unusual to see a little bit of a reaction there. Oh, maybe not. Maybe I spoke too soon. Maybe they're going to nosedive the market this morning. Good follow through on a lot of signals here. So here was that first micro macro cross in the hawk. That would have been a nice one, maybe to trail a contract. You see, this is the again the big benefit of trading a market like the NASDAQ. I'm not doing it this morning, but because of the smaller tick value, if you can trade multiple contracts, it takes away that struggle when you're trading a single contract. Do I take profit on target? Do I try to run it out further? What do I do? I think it's pretty obvious we are in a bearish trend today. Thanks for pointing that out, Phyllis. I forget that not everybody is familiar with the Geiger counter. Phyllis asks, what's this round barometer thing you do on the Raptor? This is an add-on. It's called the Geiger counter. It will work on any chart style. I just happen to have it on my Raptor. I have, as you probably noticed, I've got a different tool on each of my birds, and that's only to avoid clutter. So here on the Hawk, I have the Day Ranger. It's a tool that tracks the daily range relative to the averages. On the Falcon, I have the support and resistance suite. Here on the Eagle, I have the trade forecaster. And on the Raptor, I have the Geiger counter. The Geiger counter is a tape reader. So it gives you a visual of the time and sales. The three parts of the Geiger counter is you have the tape here, so you can see the history of the buying and selling. So you can see there was a big buying block that just came through here, and that's probably what lent a little bit of support to the market. Then here on the dial itself, we've got the arrow, which right now is neutral, but it will paint green or red as there's a little bit more of a bias. And then there is the dial, along with the bid and ask. You'll notice these bid and ask numbers are the same that we have here on our bid and ask toggle. But what's interesting is when the dial, see how the dial is pulling here or trying to pull here to the buy side? And if it pulls and sticks and holds for, say, like 3 or 4 or 5 seconds, that shows you the buyer's chewing through a lot of orders. If I brought up a dome, 1 second here. Okay, hold on. I keep picking the wrong dome. All right. So if I brought up a dome, you can see the buying and the selling that's going on. When the Geiger counter pulls here to one side, did you see the dome jump to the upside? Watch when it moves again higher or lower and sticks. Okay, see how it's sticking and sticking and sticking? If it stays, like I say, for 3 or 4 or 5 seconds, this dome is just going to be chewing through the buy orders on the upside. So see how it's going there? So what the Geiger counter shows you is it gives you a visual of the buying and selling. So if you're looking at a signal, let's say you were considering this number 2 signal right here, and you're looking at the Geiger counter and you keep seeing it pull here to the buy side and getting a little bit sticky on the buy side, that would perhaps give you a little bit more confidence to buy. The Geiger counter was initially developed because one of the DTS owners said, can you guys give me a tool to let me know when it's time to get out of a trade? What this fellow was doing is he was trying to play his runners. So let's say he sold this number 1 signal and he wanted not to take profit on target, but rather to run it out as far as he could. He would be watching the Geiger counter to see when the buyers got more aggressive than the sellers. And at that point, he would tighten his stops and or take profit. So a very helpful visual tool to let you see the flow of buying and selling. This little green line, this envelope that's around that current price bar, that's also part of the Geiger counter. It kind of gives you a very short-term bias. So if you see that it's printing red or green, say like right now it's printing red, that tells you that short-term, there's a little bit of a bearish push right here. And that would make sense because, of course, prices come down and we're at the low of the morning. So I'm not sure if Adam is still running the New Year's promotion, but for those of you who might be interested in the Geiger counter, I just put a discount code into the window. If you enter that discount code, you can save 20% on the purchase price of the Geiger counter. Or email Adam directly and see what he can do for you. All right, so we had a couple of things going on there. We had another first micro-macro cross signal here on the Hawk. That sent the market a little bit lower. A nice little flag formation here in the Eagle. Didn't quite get to the hard edge, but getting close enough that you could consider a hard edge bounce, and another little bit of a move lower. The Raptor, of course, producing the number 3 signal, which is the continuation signal, and it definitely looks like we have a trend to continue here this morning. Definitely a lot more activity going on today than yesterday. I haven't checked the news to see what's going on, but something's gotten the market's attention this morning. All right, looks like the buyers might be digging in a little bit. The Hawk coming back with yellow bars now. A little bit of a rally. Green bar sell, which you could look to buy. The green bar sell is the counter trend signal for the Hawk, not to be confused with the green bar sell in the Eagle, which is actually a fairly strong continuation signal. But you could buy above that high. That would definitely be counter trend, however. So just bear in mind when you're trying a counter trend signal that you're giving up probabilities for having less money at risk. So there's always a trade-off in trading. I wonder if they're going to hold here. If this is going to be the low of the morning and they're going to maybe try to rally the market up from here. Okay, here now a proper first micro macro cross in the Hawk. We're getting some conflicting signals, so the Hawk and the Falcon looking a little bit more bullish. The Eagle and the Raptor definitely still bearish. We are into the hard edge, and remember, when we hit the hard edge, we expect the market to give us some sort of reaction. Don't always know if it's going to be a big reaction, but we do expect a reaction. Well, again, we're looking a little bit more bullish there. Let's take a look here at the Raptor. Definitely entered a little bit of a sideways phase. By the way, you could have interpreted this signal here as a number 2 signal. It didn't print as a number 2 because this retracement here was probably not deep enough to meet the programming parameters. But it has all the elements of a number 2 signal. A very, very early cloud crossover signal if you were looking for a reason to buy, but let's not get too cute with the market just yet. Oh, darn it. I was just going to go over here and do this first micro macro cross on the Hawk, but oh well. It's going to get away on me now. So once again, the first micro macro cross, when your micro lines, macro lines cross over, it's the first in sync signal. So everything is green, we print a signal. That's the first micro macro cross. And not too much difficulty getting to the profit objective there. With the single contract, I would have tried to double the profit target, or maybe even just try to run it out. Either way, it looks like that would have worked out not too badly. All right, so getting a little bit more of a bullish flavor. Still haven't seen a reaction to the hard edge. It looks like we're going to produce a green bar sell here in a minute. Okay, Raptor owners, what signal am I waiting on? What signal do I expect the Raptor to print? What am I thinking might happen here? Yeah, there we go. We got a couple people playing. Yes, that's right. The #1 signal. Well done. We're looking for the market to pull back, the clouds to come in sync, a pullback, and then a push out in what might be a new trend, at the very least a little short-term move. So I'm looking for a #1 signal, or waiting on a #1 signal. You know, depending on how things shape up, right now we just have the warning dot. And the clouds are not in sync yet, so you could consider this an early #1 signal. But I don't want to get too aggressive with this, because we have a pretty strong downtrend this morning, right out of the gate, the bottom falling out of the market. So I don't want to be too aggressive on the buy just yet. All right, here now is the crossover buy. We've got our warning. That's the #1 signal. So all the programming parameters have been met. The only problem with this one is covering the trade. I'm pretty much committed to covering it all the way down there, and you can see trade managers saying, sorry, Eric, you can't afford that one. Running a tighter stop, you know, maybe below this swing, it might work out, but it's just a little bit cozy for my liking. Well, it looks like it's going to go, though. There is such a thing as a proper stop in a trade. And sometimes if you can't afford the stop, well, you may have to just sit on your hands for a minute until you do get a setup you can afford. See, now with the tighter stop, pardon me, I don't have a lot of wiggle room. had I had my stop down here where I can't afford it, it gives me a lot more wiggle room. I can let the market move against me a little bit. I can wait for a reaction. Then I can roll my stop up with a little bit more confidence. This tends to happen, by the way, if the market makes a rather smooth progression like this without any significant pullbacks. It makes it a lot more difficult to take the trade. And sometimes when you get your signal, the market will make a rather deep pullback, which just makes it that much harder to trade it. All right, well, let's put that away for now. Oh, I'm a little bit slow on the switch here this morning. 4-arrow consolidation in the hawk. 1, 2, 3, 4. The market taking a little bit of a move higher there. We should see some selling. I don't trade fib levels, but just for curiosity's sake. Where are we sitting? Oh, a bit of a deeper retracement than I thought. I thought we'd be sitting here around the 62%. So all the fib traders are getting hot and bothered now. Yeah, it's a little bit of a dilemma. You know, we've got the bigger downtrend on the day. We've got a little bit of an uptrend here more recently. I would entertain a number 2 signal here. That's the counter trend signal. And look for a retest of this low. There's the number 2 signal. I'm only going to take a single on this, though. I don't want to get too crazy. If they fill me short, I'm going to extend my profit objective as well, see if it won't go down here to this secondary resistance line, support line, from the support and resistance suite. See here on the Geiger counter, we just had all that buying go through the market. Well, that's what pushed the market up here. Getting a little bit more selling coming in now. They're thinking about it. Nobody wants to be the first one in. All right, so I'm going to bring my profit objective down here, say around 66.40. That was a weak fill. Come on, get below 66.50. You can do it. Come on. They keep kissing 66.50. There we go. Get below there. Get below there. Oh, man. They're trying hard. Here we go. A very slow drift lower. Okay, we managed to hit our break even. And if I were smart, I would take profit on target. There we go. I would have hit my high probability profit target. I'm going to try to squeeze this one a little bit more. And I think I'm going to roll into a more aggressive stop strategy now. Maybe something like my bar high low. Give them a couple of bars, and that's that. There, that's all you get. All right. Might have been overly aggressive at 66.40, but we'll see. Yeah, see you, Scott. Scott's had enough fun for one day. Obviously, the 66.45 area a little bit sticky. That is where the buyers rallied the market up from before, once we got on the other side of the trading band. Here we go. So we took out a few traders on that little push through 66.45. You saw the market zip lower as we engage some of those exit orders from the earlier buyers. I'm running a very aggressive stop, and it may end up stopping me out prematurely. We'll see whether they get down to 66.40 after this or not. But that's all right. Decent little trade. Good for another $100, I think. Yep. So if the buyers are going to come back, they're probably going to try to do it around here, around the hard edge. I bet you we're 50%. Yeah, there we are. We're 50% from this run up. So somewhere around here is where the buyers are going to try to get a little bit more aggressive. If they're going to try to rally the market again. Oh, are we going to see a second push lower? So I think what's likely to happen at this point is that it's very likely we're going to see the buyers try to rally the market up, and then it's going to be decision time. And by that I mean the buyers are going to muster a little bit of a rally here, and as we get closer to these highs, the sellers are going to be more interested because now it's going to start to look like a double top. And at this bar right here, it's going to be do or die. Either the buyers will rally the market higher or the sellers are going to push the market back down and possibly turn this into a sideways trading range. There, you heard it here first. That would be my speculation on what we're going to see here. We're going to get a red bar buy signal here on the Eagle, so that's going to confirm that. Here on the Raptor, if we produce a buy signal, even though it may not print a number 3, it will be a hard edge bounce, a number 3 signal. See you, John. We'll stick out the rest of the morning session here. It looks like we might get one more opportunity. We'll see how things play out. Most difficult thing this morning, I think, is trying to get a handle on who really is in control of the market. Is it the buyers or the sellers? Here, the hawk is producing a 4-arrow consolidation / macro pullback signal to short. The falcon working a possible late filter entry signal to sell. No signal yet, but it's kind of working it. And the eagle, the band has flipped over, is a little bit more bullish, as it is on the raptor as well. So once again, the tool's not all in sync, which is making things a little bit more difficult. Oops, I was a little late here, but there's that number 3 signal that we were just talking about. Again, stop placement a little bit tricky, but because I'm anticipating a rally back to the highs, I could probably get by with a stop that looks something like this. Problem is, if the market falters on this rally, if it changes direction early, I think we're going to see the sellers step up early. All right, a little hesitation. You know, if you think the market is moving in a sideways fashion or you're not sure about the follow through, there's nothing wrong with tightening your profit objective. Rather than going for the regular swing target, you could go with a scalp target and just look to grab 50 bucks. And for those of you who say, $50 is not worth my trouble, just give yourself what I call the sidewalk test. If you're walking down the street and you happen to see a $50 bill laying on the sidewalk, do you stop and pick it up? Or do you keep walking by? I'm going to bet that you're going to stop and pick it up. Well, the markets are no different. And for the benefit of those traders new in the trading room, let me explain briefly the power of multiples. For those of you who think $50 isn't a lot of money. You make money in trading, not by trading more often, but by trading what we refer to as size, which is trading slang for multiple contracts. In the non-trading world, you make more money by doing more, right? If I work hard, if I produce more widgets than the next guy, I will make more money. But in trading, trading more tends to have the exact opposite effect on your account than trading less. In trading, in the world of trading, you're usually better off doing less rather than more. Your objective as a trader should be to make $100 per day net. So if you're trading for $50, that means that you're looking for two $50 trades. We're going to forget about commissions and fees for the moment. If you can do that, if you can trade and make $100 a day, and you can trade, say, 5 contracts, by the end of the year, you will have earned $100,000 by taking two $50 trades a day. Just looking for two $50 opportunities. And you can see we've had plenty of those today. We've had, if I were looking at a $50 target, as I normally do here on the Hawk, we've at least had a couple of $50 trades. Here's a first micro macro cross lower. There's one. Of course, we had the one right out of the gate. I don't even need to show you that one. You know it hit its $50 target. Here's a macro pullback. That hit its $50 target. So you say, okay, well, Eric, that's great. Too bad I can't afford 5 contracts. All right, well, what if you could afford 3 contracts? That's still $60,000 just on two $50 trades. Can't afford 3 contracts? What about 2? That's $40,000. Can't afford 2? Trade 1. That's still $20,000 over the course of the year on trading just twice a day for a $50 profit. Now again, I'm excluding commissions and fees, but by trading less, your commissions and fees are going to be less as well. So even if you dropped another $2,000 on the year, which is generous for commissions and fees, that's still $18,000. What could you do with an extra $18,000? Well, I could take the fam on a really nice vacation, or put it in your savings account. It would take a lot of pressure off the job. If nothing else, you can leave it in your savings account so that maybe the next year, instead of trading single contracts, you can afford to trade 2 contracts or 3 contracts and so on. All right, so the market's flinching a little bit early here. Didn't quite get to that double top I was looking for. Once again, we've got a lower high, and it looks as though the sellers might be trying to knock the market down again. We did produce a sell signal here. This is kind of a very late number 2 signal. It has the structure of a number 2 signal. It won't print, however, because our clouds are all intertwined. And here the eagle with another rule of 3 signal. Even though it's only 2 signals, it still has the format of a rule of 3. And you have another opportunity at that second push entry. So you can either enter here, or for a couple extra ticks, you can enter below the low of the swing low right here. I'm not going to take the trade. I'm going to wait for a little bit more structure. But I think we're going to see the market tail off here a little bit. Once again, you may not get the full profit target on this type of trade, but even if you took, say, $100 out, you're almost guaranteed to get $50 out of this. Yeah, there's a danger we're working ourselves into a bit of a sideways trading range. All right, well, there's the break to the downside. Oh, good. It looks like they do have a little giddy up. So it just confirms the trend is down. Yeah, Phyllis says, I like the Geiger counter. It's hard at work. It does give you kind of a feel for which way the market might be leaning, at least for the short term. And it's kind of fun to watch when there's nothing going on. So the clouds crossing, we're pulling back into the clouds. We could come out of this with a number 1 signal. But we are getting a little bit long in the tooth, as they say. The morning session winding down, and We made some good progress earlier out of the open, big decline, retraced most of that, and now we're just kind of drifting sideways. So I smell a bit of a trading range coming on. Which will probably last the duration of the morning session and probably pretty close into the close as well. Things might loosen up a little bit by the end of the day. But right now we're, like I said, very non-committal. All right, gang, I think we're going to button up shop here for the morning. If you are going to continue to trade this afternoon, I think caution is in order. If this is a trading range, I think we can expect a retest of the top end of the range. So I would look perhaps for a little bit of a rally. Notice we're trading right through the middle of the trading range. And notice as well how our band is starting to twist up like a rope, and it will get tighter and tighter and tighter as a trading range develops here. So essentially it's two-sided trading, but a lot of times you're going to be better off avoiding the market when it's like this because the follow-through, we just don't know what kind of follow-through there's going to be. So if you do take a signal, protect whatever open profit there is, and do consider if you're up $50, $60, just grab that and give yourself a pat on the back for a job well done. Okay, I will see you again tomorrow morning. We'll talk to you then. Bye for now.